All right, good afternoon. So this is currently Sunday, June 23rd, 2024, approximately 1:27 p.m. Eastern Standard Time. So shouldn't be a too long video, just a follow up to the last few videos in this series as we continue to improve our trading strategy. Wanted to just touch on a few things, do a weekly analysis, see where we are, how last week went, and then have an idea where we are for the week coming in the trading. So let's see. Let's take a look. All right, as we can see here, there's the daily chart for USD JPY is basically the main currency or instrument that I'm trading right now for this current challenge that I'm in. So as we can see, my screen is doing a refresh. Let it do a refresh real quick and get back to it. Not sure what's going on there. Right, so let's drag this out, get back to the daily. All right, get back to the daily. All right, we're right where we need to be. All right, good. Make sure everything is saved. Okay. All right, so looking at the chart, so I made a few changes as far as the color for my support and resistance level. So you can see I just changed my or supply and demand, however you want to call it, using the Smart Money Concepts by Luxago. That's where I'm getting the supply and demand zones. So I turn my demand zones green and my supply zones are red, just to keep continuity with basic basic foundational type of color coordination and everything, not to confuse things. Then I also enabled in the indicator, in the Smart Money Concepts indicator, I enabled the higher low, higher high, the daily, weekly, monthly, just to have an idea on the charts where those levels are. Just keeping track, as you can see right here. And I turned the lines white so that I could see those better as well. So, all right, so into the analysis. So basically what we saw last week, we saw price continue to make its move upwards, and it does not show any signs of stopping. Remember, one of the keys to this trading process is, and especially, when we're looking at our doing our analysis and looking to take, trades and key zones and everything. All right, so the daily, right? So remember, the daily is what's going to drive pretty much our directional bias. Seeing as though we're trading for the most part primarily off of the 1 hour, which is our technical analysis time frame, and the 5 minute being our entry time frame. But our main time frame is the 1 hour. So our directional bias comes from the daily. So as we can see, remember, using this oscillator right here for our momentum, we see that momentum pretty much, we got the cross, back on Friday the 14th, right? And the market's been pretty much going up ever since. So it started going up way long before that, but we got a solid cross. But again, the idea is that for momentum, from a momentum perspective, as long as this white line is above the blue line, you were looking for bullish or buy trades. Keep it simple, right? That's our directional bias. So we go to the 1 hour and we look for our opportunities to get into that buy. And we'll do that here in a second. As we can see on the oscillator, we are still very much in a buy status, right? with not a lot of signs of slowing. Even when you look at the footprint, it's showing positive delta. So for right now, what I'm looking for is for price to get to this key area, which is a point of interest in a key area for a lot of traders for this particular currency pair. So once price gets here, we'll see what it does. Now, if you want to get in, because we know for the most part that price is coming here, right? Let's get an idea of what the pip count would be if we were to get in on the move. So from right here where it is right now, right to that high right there, we're looking at 45 pips, a 45 pip move at the least, right? 45 pip move at the least. So you drop down to the 1 hour to get your entry, right? And we're going to look at what that looks like. But as we can see, we kept, breaking structures, and moving to the upside. And we see we broke previous week highs, and also previous month highs. So basically, this move right here, is very strong. This bull move, and we're going to take a look before we're done to see what the individual currencies are doing themselves. Actually, we can do that right now. Let's do that right now. So we're going to look at DXY first, get an idea of what DXY is doing. All right. So looking at DXY is pretty much following obviously the path of the currency pair, especially with the dollar being the front pair. So look, as you can see, the dollar on its own just crossed over and closed above a previous week's high. So that's significant. That's significant. So basically, again, we're looking to see the dollar to continue for quite some time. Let's see. Not that we're just want to see curiosity. If we, yeah, that's a lot. So the dollar still has a ways to go in this up move. So there's a possibility that the dollar will continue in this direction for quite some time. Now, there's also the possibility that we could get a pullback. So look for that. Look for a pullback. You can look for a pullback on the dollar as well if it starts losing strength. But again, looking at it right now, we got a bounce right here, looking at the momentum. So the momentum and the separation between the two seems pretty good. So we got some space in between here. So that momentum is still, positive for the dollar right now. Now, at some point, we are gonna get a pullback. But we can still look for buy entries, seeing as though the dollar is still strong. And it's looking to get into this. This right here is a previous month's high. So very significant area to be trading at. So that's the dollar. So we know the dollar is bullish for the most part. So a lot of buying on the dollar. Let's look at the Japanese yen. All right. Now, on the contrary, we have the Japanese yen, which has been continually falling for quite some time. And it's continuing to do so. As we can see, we had, I guess it tried to gain some strength, but lost it. And then eventually just momentum, as you can see, just a downpouring. A lot of selling pressure for this yen currency pair, right? For this yen currency right now, this yen index. So the Japanese yen still looking very bearish. Let me see. Yeah, looking very bearish continually. We see it broke a previous day's low. So it's doing the opposite of what the dollar is doing. So for right now, this this UJ currency pair is still looking very bullish for a while. So let's go back to UJ. So we can see that the dollar is holding its ground and the Japanese yen is continuing to lose ground. So again, still bullish on the pair. So let's drop down to the 1 hour to get an idea of some trade setups and what we're looking at again for our technical analysis here. So Keeping in mind also, so the red liquidity lines are my weekly. These are my weekly liquidity levels. The green, my daily liquidity levels. So that's what you're seeing there. I took the white lines off, the 4 hour liquidity levels. I don't feel like I really need those right now. Since I'm going for, longer term trades or what have you. All right, so as we can see on the hour, we started losing a bit of momentum towards the end of the day, which is fine. We want to see that because we want to see a pullback. We want that pullback, and then the continuation. Something I wanted to point out that a lot of people kind of get confused at, right? And we're looking for reversals and stuff. Right now, again, utilize if you're trading, if you're doing your technical analysis, your main time frame is the 1 hour. You utilize the 5 minute for your entries, and then you utilize the daily for your directional bias. Remember, your higher time frame is what frames your directional bias. So there should be no confusion when it comes to what direction you should be trading in. That's should be a easy thing to understand and see and point out your direction of bias. And so the reason that's important is because we see things like this, and I'm gonna show you I'm gonna tell you the reason for this. So we see moves play out like this, right? You see where price created a high, but then it created this low right here, right? So it took out these previous higher lows, right? Gave a change of character and everything, right? This is not a reversal. This is not a reversal setup. Um, a reversal setup would be, again, if the daily was showing a loss of momentum and the bias shifted, right? Nowhere on the daily, did momentum change to the downside. So there would be no reason for trying to catch a reversal sell trade, right? Again, when you're thinking about trying to catch a reversal, ask yourself on the higher time frame, um, is that in the direction that I'm looking to put this trade in? If the answer is no, then you might not want to put that trade in because here's what happens, right? This right here was a liquidity grab. This was to grab the liquidity below these lows right here, and then get whatever was remaining in this fair value gap, which again I told you before that these fair value gaps are basically more so for continuations and not reversals, or what have you. So we see price came down, created this low, great opportunity to get in for a buy trade, right? Looking at the overall bias, the higher time frame bias was bullish. So when you see this right here, when you see price create, a high or low, let's say you were the trend, the current trend was bearish, right? And you see price create a change of character to the upside or, higher high, right? Those are good. Those are good and we're talking on the hour time frame, right? Especially if the daily time frame is bearish, right? Because we want to see those liquidity grabs. Because what that tells us is when price grabs liquidity like that, when price creates this lower low right here and grabs that liquidity, that's an indication that price is going to probably move big time in your favor in the direction of the higher time frame bias, right? So your opportunity you could have got in down here, when we got across, right? And again, our entries come from the 5 minute. So you look for price to, indicate that this particular move right here is done. And we start to look for entries to the upside. This was a really great indicator right here that we were going to push up just big time, right? So price, this move right here was a godsend for us if we were able to get into this move. and ride this baby up because it grabbed liquidity, and then what did it do? Created an imbalance. That means, look, we're taking off. When we create this imbalance, we're taking off. Boom. That's what I want to see. I want to see this imbalance created and take off. So let's say you missed this initial move right here, right? So you let price do whatever it's going to do. It created a lower high, that's fine. But it came back and created a higher low the very next day, right? So 08 in the morning, we took off, right? We took off once again. And it's pretty much been, it's been up and down, but, for the most part, in our directional bias ever since. And we can see, where the market is doing its pullbacks. So you want to catch again in an up market, knowing that the higher time frame bias is bullish, right? You want to catch one of these moves right here. We're not looking at these right here. We're not looking for these. Look at how short this was. Look how short. Look how short this moved from here to here, right? Looks big on this oscillator, right? But no. But what we want though, we want to catch these bottoms right here because we know that the market is bullish. So if the market is bullish, I'm looking and I'm waiting for the crosses to happen at these bottoms. So when these crosses happen at these bottoms, boom, I'm taking off. I'm taking off with price, right? That's what we want to do. So what we want to see. So again, my point is with this is a really great setup is going to be when price, does one of these types of moves where it creates, what seems to be a reversal type setup, which in reality, it's a liquidity grab for a bigger move. Again, taking out directional bias from the daily time frame or the higher time frame, depending on what your trading time frame is and everything, is how we're going to, discern, where the market is going to go, and for the most part, how much strength that move is going to have, when it does make its move. Again, every last one of these right here were pretty decent moves. Let's look at the small. Let's look at a small one. So from here to here. 70 pips. 70 pips. I can't make this up. Let's do another one. Let's do another small one. Just a small move. This higher low right here. From here to here. 56 pips. Right? So just catching these little bottoms right here. Let me look at this one right here. All right. We got a higher low. All right. And this look, it doesn't look like much down here, right? But all right, let's see. Let's see what it was. So from here to here, 83 pip move. That's what happens when you have a strong trend and you get in the direction of the trend. Again, can't overstate how important it is when you see these moves like this. Again, it's not a reversal setup. That is a setup for a huge continuation move. So I really wanted to make sure I drove that point home because a lot of people get caught up trying to catch that reversal when the higher time frame doesn't say anything about a reversal right now. No, we're continuing in our same direction. So don't be fooled by that, but you can utilize it to your benefit greatly. So now what we're looking for our, again, just to go back a little bit. So the color that you see in my candles, I wanted to use some type of candle setup that gave me volume instead of just the spread. So I'm using the volume candles. I didn't change anything or what have you. So again, I think I've pointed this out before, but that's what these colors and everything for me to kind of see the volume in the candles without having to go to the footprint every time or what have you. Like I said, just kind of, looking at my entries and stuff. So we see that price continue to move up. So now for our analysis for the week, right? So again, we said that, price, weakened a bit. So we are looking for a pullback at some point. We have a fair value gap here. So look for, again, so because this is our first point of liquidity, we want to consider it in our trading setup. So we'll see what price does as it enters this fair value gap. Again, fair value gaps should be utilized in most cases for continuation trades, right? Unless you trade on a higher time frame, it can be used for, maybe a reversal, whatever the case may be, just depending on how you do your analysis and how you do your trading setups and stuff. But for these purposes, I am looking for a price before I get in on a buy. Remember, I need some type of liquidity. My first step, my first option for liquidity is always going to be the supply and demand zones, right? So this demand zone looks real good to me right now. But I have a fair value gap here. So I want to see when price pulls back into this fair value gap, do I get that continuation trade to the upside and get this move right here? So that's the next move that I'm really looking for, to get in on this buy setup right here. Now, price can really come back, and fully mitigate this fair value gap right here and come down to this order block right here, which would make my day even better. We see it's right here, previous day highs located as well. So this is a pretty strong trade setup, to take. So if price does come back in here and test this previous day's high, that's even better for us. See, I don't want you to get discouraged thinking that, and look, price can come, it can dip past this previous day's high. I think a lot of people think that it's supposed to, get right here, it's that pinpointing. It's not. Price is not that pinpointing. This is not perfect by no means, right? So it very well could pass through this previous day's high, just under it or whatever, anywhere in this order block, right? And you get your setup for the buy trade. But let's say, for all intents and purposes, it comes here, right? We can, we set our trade here, and this gives us over 100 pip move to get to that liquidity zone right there, right? That's dope. That will be a dope trade for me. I think anything catching this up move, and in a positive will be a great trade, or what have you, right? So now another thing too to keep in mind, right? If this does reverse, you want to see if it leaves imbalance. So you want to see if we get a supply imbalance, because once you're ready to get on that buy move, you want to consider that imbalance zone that's created from a down move, an impulse down move, as an area of take profit, or what have you, right? Because again, that could imbalance could imply that the market is getting ready for a reversal. So that's something to keep in mind. These things are not 100% ironclad. No one size fits all. It doesn't work that way. You have to understand the different moves that the market is making and the price is making, and understand the reason for those moves, so that you understand how to better trade those moves, right? We get caught up so much into wanting to, get in and jump in and everything, not realizing or understanding, exactly why. Have a reason for jumping into the market, right? Why are you putting in that buy trade? Why are you putting in that sell trade? Did you do your analysis? Did you what is the higher time frame bias, right? Again, if your trade isn't in the direction of the higher time frame bias, you might want to wait a little bit until you get a setup, that points to that. So again, for me, I'm looking for first option here, is to see what price does once it gets to this fair value gap here on the hour time frame. Again, if we get a buy setup, in this fair value gap, cool. I'm good with that. I'll take it. I'll put my buy order in, and again set my target for this area or this area right here, right? If price blows past this fair value gap, with the impulse to the downside, then we'll look to see what price does in my next option. This would be my next option for a trade, right? This order block right here. So I have a couple of options to get in on this up move or what have you, but also paying attention to the higher time frame bias and also momentum and everything. So I think that just about covers everything that I wanted to discuss for today. We've already looked at the individual currencies on their own to see what they're doing. So we know, for the most part, what the Japanese yen and the dollar looks like for the coming week. And we've pretty much done our top-down analysis to look and see look to see what our next trade setup is going to be, and then how we're going to play the market kind of going forward. So I hope this has been helpful as always, and you get something out of it. If you have any questions, as always, please put them in the comments, and I'll try my best to get to them as soon as possible. So again, lucky trading to everyone.